The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock till noon Eastern Time. And, of course, start off the day, 9 o'clock, Steve Rhodes, 10 o'clock, Steve and Tom O'Brien together. I come on at 11 till 12. I'm followed by Larry Pesavento. Then we have Dave White. Then we have Ken Shreve. And then back. No, I missed someone. I missed Daryl Martin. Daryl Martin after Larry Pesavento. And then we have Dave White. Then we have Ken Shreve. And back to Tom O'Brien, 4 o'clock till 6. Day before Election Day. 1.5 sessions, or at least maybe 2 sessions we can call it, to go. By this time on Wednesday, the market will have probably spoken. So we're waiting and we're looking. We're expecting certain parameters to be met to give us clues. At least I am on the Dow, the S&P, the Qs, and the volatility index. But I'll make it real easy. By Wednesday or Thursday, volatility index spiking up into the 20s, market comes down. Holding in the 18 to 17 area, market is kind of neutral, goes sideways. Drops to the 16s, market has a very strong rally and challenges the recent highs. I don't know how much simpler you can make it than that. I'm not sure if it'll work out. But those are the parameters I certainly am looking at. And my subscribers to my opening call. That's my daily service. Very did I do a lot of work this weekend? I showed charts today that I think give a really clear picture of the parameters I'd be looking out, and what would happen and why. So if you're interested in my service, my opening calls starts coming out. The charts are sent out to the TFNN server starting at about sometime after 6 o'clock. And you get everything from the Dow to the diamonds to give parameters on the S&P, the TLT, the GLD, dollar, just everything that's important. Plus, of course, our particular positions. Now, what's interesting is I have continued to say that the actual indices are not as much of importance for me right now. I'm sure they're going to be in the next coming days. But right now, because we're in this trading band, I see the opportunity, and I think the opportunity is going to increase this week, where if you see positions that have very negative technicals, I see absolutely no reason why you should not be comfortable shorting. And you can always just put in your buy stop, nice tight buy stop, and treat it as if it was going long, but you're upside down. That's all. You're playing it the other way around, inverse. And on the other side of the coin, long stocks. This is what we have. We have 2 stocks in my opening call that we bought last week, because I was looking at the market having internal strength in certain sectors and certain stocks, and they're doing very nicely so far today. Of course, the day's young, not even 2 hours into the first trading day of the week, but they are doing very well. And on the downside, we've got shorts, and those are doing very nicely. That means that they are going down. I'm trying to add a couple of positions, and if you are looking at, for instance, we went short a particular stock at about a 3-year high. Just off the high, we went short. And so far, it's working out. This is based on the monthly chart. Why? Because there's just a chance that this particular stock is making what I call a hat-trick top, a very serious monthly top, which means time and price to the downside. If I'm wrong, it's just real easy. We've got the stop in place, the buy stop in place, and it's just above the previous. At this point, I'm keeping it just above the entry point, actually. It could even be at the previous all-time high, but I don't even want to risk anything because this should work, and if it doesn't work, that's fine. And I think I've been feeling very comfortable about this whole shorting, long short position. Maybe it's 2 months now, maybe a little more. And it's given us nice upside potentials and downside potential. So that's the way I'm playing it right now for subscribers, trying to be a little safe and small positions, trying to keep some cash in hand. Why? Because there are going to be opportunities at some point either way where we want to add to those positions. Now, if you're looking at the Dow, I'm showing the white background chart just because this is a good one to print out. A reason why I would like you to consider printing this out is because there have been 2 peak Fs in the Dow chart from the 12,035 low bar of the 4th of June. The first one was a peak F with a doji candle. I'm going to teach you about doji candles, round numbers. We're trying to go short a particular stock that made all-time highs with a round number at the very high. There are so many stocks that have done this, or what I've been teaching for the past year, what I call the silent candle or the silent round number. So this is very important to me, and I love teaching. So I've set up a 2-day ChapmanWave seminar on the December the 6th and 7th, Thursday and Friday. And it's a webinar. It's a webinar, meaning you can be anywhere in the world. You ask me a question, I'll answer it right away. We're going to go through the basics. You're going to get specials as a kind of a bonus. I love teaching this, and obviously I'm an advocate of the ChapmanWave. It's the wave form that never sleeps. And I consider it a very important tool for many people. I just get emails constantly from people saying, thank you. That was a peak D, and I shorted and I made money, or I'm waiting for the peak D. That's the core, or the essence of this particular waveform. So, but sometimes it goes a little higher. In this case, the Dow went to that 6th highest candle, the 6th highest peak with a doji candle, 13,128 on the 30th of July. Pulls back to 12,778, goes to a very quick ABCD. I'm going to teach you. If you didn't know anything about peak A, peak B, peak C, peak D, you would not know about this particular technique. But there's a technique that I teach about the speed of a Chapman wave and what can happen when you finally get to a D and what you've got to expect. Well, got to a peak D at 13,330. That was 13,000. Yep. On the 21st of August, pulls back again. Trough C. I call them troughs on the downside. Capitals denote a buy mode. Troughs denote a sell mode, or at least a sell trend. And that goes down to 12,977. And that is on the 4th of September. And it runs up quickly. And it makes a pattern that I call, it's both a right arm extension and it's like a rogue wave, but I try to keep it as a right arm extension, saying that the MACD might have given you that big push to the upside. Stochastic was good, but then it started to fade and fade very quickly. Then there was a sudden rush of strength, but it was a strength in price, but absolutely failed in the technicals when it went to that peak F, the 6th highest peak at 13,661 on the 5th of October. Now it's come down, but it's still come down in the left side, right side price time match, which says 12,977 would be the target by the 9th of November. If it breaks it decisively before that, 12,916 is the 200-period exponential moving average. You can see right there. Just checking. Yep, I can see it nice and clearly. That kind of pale peach color right there. And what's even more important about this, stochastic is trying to rally. The price is not doing very well, and the MACD has failed so far to turn positive. So let's just run the numbers here. And I'm going to give you, I'll tell you right now that if the Dow closes underneath 12,800 by Wednesday afternoon or Thursday, that's going to say, okay, be careful. It doesn't matter who's in the White House right now. The market's saying, I need a breather. I need to just take this real slowly. There are still some stocks that are acting very well, but a majority of the stocks are starting to show they can have bounce potential, but they haven't really turned the corner for a major move to the upside. That's the way I'm reading it right now. I might change my mind, but that's how it appears right now. But the base of support between 13,030 and 12,970 is really very strong right now. So if it breaks under that, you've got to be somewhat careful. On the upside, if there's a rally that takes the Dow to 13,350 to 13,410 by Thursday afternoon or Friday, it's a sustaining power that I'd be looking at. And what leads? Will the Dow Quartet, GE, IBM, Triple M, and UTX be participants? Will you get Dow leadership? Right now, Boeing is actually a leader in the Dow on the upside, and you've got Merck pulling back sharply, down $1.07. Kind of a mixed scenario all the way through. You've got CVX running quite nicely, but then Verizon's pulling back. So this is definitely a very mixed market. Suddenly you've got Hewlett-Packard moving up 1.53. It's up 21.21%, but it's only at $13.97. But it is having an impact. It's helping the market. So the Dow right now, let's run the numbers. The Dow is at 13,089, down 3. The S&P is down, up 40 cents at 14.14. This is after a really strong move to the downside, really an engulfing type candle on Friday. And the comp index is up 9 at 29.91. Now, this is very interesting. Gold is at $7.40. Let's just have a look at the gold, the GLD. Both the GLD, let me just see if the GC12 is here. Yep, the GC12, which is a December gold, is sitting right on the 200-period exponential moving average. Remember, that was my target for this particular down move. It was at the 1672 level, and the low on Friday was 1674.80, and today is 1672.50. So it touched it exactly. So you can easily see a little bounce here. MACD and stochastic are right at the point where, yep, they could turn around. You had a huge volume candle on Friday. I have a reading for these particular candles, volume spikes, but I need confirmation within 2 days. So I'm not even going to discuss it now. I'll discuss it again on Wednesday. But there's a signal here that says, hey, this is going to be a nice little bounce, but be careful. And so that's gold, and the GLD, which is the Spider Gold Trust, has not hit the 200-period exponential moving average of 161.76. That has been my target to the downside. If it breaks that, we're looking at a left side, right side price time match of 159.56, and that should come in around about the 9th of by about Friday. So that's that. And then, right, silver is right now, silver is up 18 cents at 31. You've got platinum down 1, but high-grade copper. Now, high-grade copper, HGZ12. Let's see if I can get that right here. Yep. It's just pulling back and pulling back. But, yeah, hey, this is interesting. SCCO, which is Southern Copper, has had a really nice move to the upside. And there's another copper stock that's had a very nice move to the upside, a low-price stock. So I'm watching this and I'm saying, hey, I've got a divergence between a couple of important copper stocks and copper itself. Bonds are up 27 and crude oil is up 36 cents. I'll be right back. Basil Chapman, 877-927-6648. And we'll take Mike in New York straight after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's down 6, S&P's down 13 cents. Just a kind of a holding pattern, maybe right into tomorrow at noon, maybe tomorrow afternoon. Suddenly there's some excitement about something or other. But this is what we're looking at, and we're going to go to our first caller, Mike in New York. Hi, Mike. How are you?
Good, Basil. You're my first call. My power just came on. So,
your power just came on? Really?
Yeah, I'm starting the Electricity Appreciation Society, if you want to join.
I have to tell you, when I got my electricity back it was just after midnight on Thursday, I just said to myself, we are so dependent on the little juice that comes out of those wires. It is, the whole 20th century is based on electricity, right?
Yes,
so
yes.
Unbelievable.
This call is dedicated to Benjamin Franklin and
Isn't it fascinating that Benjamin Franklin's light bulb is going to go the way of the dodo bird?
Right.
And the new product, I don't believe is as successful. I think, in fact, it's a bit of a flop. But they're still selling it because it's being pushed by legislation.
Right.
We'll see what happens there. So,
yeah, but I'm thankful that a lot of people were devastated, and white light goes out to them.
When I heard stories, I got some calls from people in New York over the weekend, and I have to tell you, there's some stories that were just absolutely tragic, just terrible. Even some of the hospitals lost their generators. 3 hospitals had to evacuate. So this is it was a horrible thing. You're right. And we take things for granted, But it's only when something serious happens you really appreciate. You're probably unaware of it because I was talking about it last week. That a tree came down in my house. So I lost electricity, but a tree came down, knocked the side of the house, the corner of the house. But my wife had driven under 2 trees and didn't know. One was just down the street. A tree fell down, knocked the wires. She just calmly drove right underneath it, not knowing. But within 10 seconds, that one came down. Right on the street, and the live wires were there. And then she comes into the driveway, which is maybe I'd say no more than 50 yards from where that one tree came down, drives up the driveway, and my neighbor was playing his piano, and he looked out the window and saw after this huge wind came up, he looked out and saw the branch of the tree bending, and he saw a car drive up with the lights on, and the next thing, pow, the whole tree came down. So my wife had 2 very lucky escapes. And you just turn around and you say, you know what? I don't care how much, whatever damage, I don't care what it is. We're alive, we're well, and we are thankful for that. It's just, that was crazy. So, and I see in the den, Terry says, my power is on. I think I will call. Okay, good. We got people with power on.
Hey, Terry, you're next. I'd like to look at Advanced Auto, AAP, if you would.
Now, this is a stock, folks. This is Advanced Auto Parts, Inc. So they benefited tremendously while the United States auto industry was kind of trying to work its way back again. And then auto parts, because people have been keeping their cars for much longer. Not only that, cars have been made much better over the last 10 years. So the age of cars has increased tremendously on the road. And they were the beneficiaries of that, and they went all the way for the last 3 years. They've had a spectacular move. Just from 2009, or AAP is a symbol. It went from 2411 to 9308. That's a pretty good move. That's a 4.5-fold increase, and it plunged from 93 down to 7487. But subsequently, it's had a very strong rally, and I've been trying to. I spent a little time this weekend, in fact, going through these very charts, because AZO is the same thing. We were short. I was about to switch to long. I said, no, let's just take profits, get out. And it's had a very nice counter-trend move. So far, while I'm calling it a counter-trend move, I have to tell you that the technicals in both areas are actually improving quite a bit. But what's really needed is for the monthly chart of AAP to substantially improve in the MACD and the stochastic, because the weekly has improved quite a bit, but the stochastic still only at 54%. It is the weekly. Now, do you know any reason? Was there a news report to give a big spike up?
Private equity came in. There was I don't know if it was an unsubstantiated rumor, but Blackstone Group is at it. So, but their earnings call is coming up, I think, in 3 days. So
really?
We should hear more about that. But there was a rumor put out that private equity might be interested in this.
Okay, then you know what? I can hear the music coming on. There are a couple of other auto stocks I want to look at. I tell you why I went through this very carefully, because Ford had a very good move to the upside, as well as General Motors. I'm going to try to put this together as a scenario. So hold on, folks. We'll be right back, and we'll look at AAP as soon as we get back from this break.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, 877-927-6648. And Dow's down 16, S&P's down 1.39. You know, the more I looked at the charts over the weekend, the more I'm saying to myself, I'm not sure the downside's quite done, regardless of what the election result is. And there are just too many stocks that are showing weakness, but there's something else that you have to put into the pie. And this is what we're looking at exactly right here with Mike from New York. We're looking at this is telling us about the rotational aspect that has been in play for so long in the market. So, Mike, everything about the decline in AAP and AZO and a couple of the other auto parts sector stocks said that they should have gone down. Any bounce should not have been as strong as it was.
Right.
But I noticed that with AZO AutoZone, one of the reasons why we got out, I haven't finished, shown the gain that we made here. It was that the stochastic, the MACD were turning around and that it was showing some strength that bounced off the 200-period moving average. But it's right at the stalling area. This is going to be so important because if AutoZone, the weekly MACD and stochastics are starting to improve, if it does this double top back to 399, which is only about 16 points away, that's kind of impressive. But is that then the top because it makes a proper double top? Or does it break out? Does it make that cup and ladle pattern that I often talk about? See, in AAP, if this was a news event that spiked it, the chart formation itself is it's just different enough from AZO, AutoZone, to say that AAP should, theoretically, if it didn't get that sudden bounce to the upside, it should have been testing 60.33 instead of being up at 80.31 because it had that huge spike on Wednesday, I think it was Thursday of last week. It went from 70.08 on the first to an 84 round number high, and it had an 80 close, 81 round number close. So it says to me very clearly, it's at 80.36. If it can trade above 81, right, it doesn't even have to close there, but if it can trade above 81, what's the high today? 80.67. For 2 out of 3 sessions, then there's a really good chance it's going to try to retest the round number 84. But I don't like it when stocks have an outside news event. In other words, this is one that I would have been looking at as a potential short. Yeah. But if there is a news event that could negate the downside by giving it support, even if it doesn't go up very much more, I would prefer not to be looking at this particular one. Now, if what you've heard about in the news report, if that lends itself to putting a little buying pressure into the stock, then I would say I'd see upside potential if the pattern that I just spoke about unfolds. It closes above 81 for 2 out of 3 days. So by Wednesday or Thursday it's moving higher. That says it can touch 84. If it touches 84, the weakness is, aha, I've got enough strength to maybe even work my way higher. But this is, to my eye, I'm looking at a stock that says a bounce was inevitable because it had come down after being a fabulous winner. The bounce that occurred was higher than I would have anticipated. AZO is more like what I would have anticipated on a bounce because of the way it came down and held the 9-period exponential moving average. So that one's acting kind of the way one would expect if the technicals improve. So this one is a little different. The only problem is, and I'm not sure which way you want to go, but if you're looking to short it on impending news, it might be held up because what is it to say? There's an offer or they want to go private?
We'll know more on November 8th. I think with the earnings report coming out, management can speak to that. Yes. It was just a report that Blackstone is sniffing around to make a private equity investment.
Because they've been doing that quite a bit lately.
Yeah, but I guess we'll have to wait for management to really substantiate that. So
yeah,
we'll see.
So I would probably say step aside, but I tell you something. If AAP by November the 14th or 15th, by mid-November, if it's back under 74, especially if it's at 72, I think that's done, and I think it's going to be going quite a bit lower, especially if no offer comes about. So that's the way I'd be looking at it. So let's see. We'll watch it closely. What day you say it's coming out?
I think November 8th, so that's 3 days.
Thursday. Okay. All right. So let's have a little patience. It's always on my list as one of those that first of all, I missed it going up. I think once we had it just for a brief while, but it's been on the way down, and let's see how it handles anything else that's coming its way. Thanks so much for calling, and congratulations on having your electricity back.
And stay safe, Basil, okay?
I'm staying safe. Thank you very much. You too. So, folks, I wanted to do something today. I wanted to show that I have no position in this particular stock. I kind of like it right now, DWA. This is DreamWorks. I wanted to show, I think I did it in the white chart. Let me just go back to the white chart. DWA, DreamWorks. I didn't do that either. I guess I was going to get to it. I didn't. I'll go to the daily. The daily chart has had a lovely move. It's trading at 21.63, down 36 cents. So DreamWorks Animation SKG Inc. Now, I think that was, that's been just a really interesting company because they came out. Oh, I used to have this all notated. I don't anymore. It came out, and then it had just a wild ride between about Opened at 37 back in December of 2004. No. It opened at 39.50, went to 41.90, and then it pulled back, and it was in a very wide trading range. I wouldn't call it a wild ride because I'm looking at a monthly chart, but in terms of not holding the ChapmanWave for very long. For instance, if you go to the low bar, the doji candle of, what is that? That is the doji candle of August of 2006. What does it do? It goes peak A, it goes peak B, it goes peak C, and then it fails because it goes to a lower low. Then it goes to the lower low, starts a brand new signal, and that looks like it would be a great signal from 17.32 February of 2009. All it does is it goes to peak A, peak B, and it fails again. When stocks, it's very rare for monthly stocks to do this. So when I looked at it, I thought, this is interesting. Now it's come back down and went to the 15 or 16 area. What was the low recently? The low in July, 1634. In November of 2011, 1634, it goes peak A, then it goes leg B, and I'm saying to myself, this is the smallest rally that it's had, but it's the most concerted. It's the one that has the most potential because the technicals are improving tremendously. They're not great, but they really are improving with the price moving up. So then I say, okay, let's look at the weekly chart. I go to the weekly chart, and I say to myself, this is the daily. Let me move that. Folks, it's always, when you're looking at my charts, it's the middle chart. That's the weekly chart always. So I'm going to go to the low right there. Well, that was a low, and then it fails. So it goes peak A, B, C, fails. How many times is this going to fail? Then it goes again. Peak A. I'm just doing this a little slowly here so you can see what I'm doing, and I'll talk it out in a minute. B, it holds that low of 1667, 1690. Yes, you see, this is going to be very interesting. Just a very steady move to the upside, and it goes to a peak D. Well, a leg D. We don't know if it's a peak unless this month there's no new high. Now, why I'm talking about this is because there are times in the ChapmanWave where patterns that repeat over and over again suddenly don't conform to the norm that they've been functioning at. See this beautiful big bowl pattern? Now, I have no position in this. I want to point out that you cannot be blind in this market to the potential for some stocks to move higher, and then you've got to know what they need to be able to move higher and sustain it. Well, if you look at this cup formation, the bowl formation. A bowl formation is like a cup but elongated. Just takes a longer time to unfold. Like the huge gold cup formation that occurred back before the breakout in 1990. And I'm sorry, in 2000. I'm doing two things at once. And so here's the DreamWorks animation weekly chart. Great move last week. Goes to 22.98. Gaps down this morning, just a little bit. Trading at 21.60. It's just worth watching. I haven't got a signal yet on the weekly because the stochastic has not yet gone to the magic number that I need. But more importantly, the daily chart has had a beautiful move up, and it's now in leg D, the way I count it. 2 peak Ds. Remember the ChapmanWave, the objective is go from the lowest, most identifiable low bar to at least 4 peaks higher. And then when it gets to peak D, that's when you've got to be a little bit careful. But look at the sharp pullback it had back in the 20th of September. From 1891, it goes plop down to 17.11. That was the 26th of September. Then it goes peak A, B, C, goes to a leg D, and now it looks like it could be peak D today, 22.98 on the 2nd of November. But look, you've got this inside track channel to the upside. What's an inside track channel? Folks, that's what I teach in my webinars. I go through all these patterns. You get the CD introducing the ChapmanWave methodology with the different patterns, how important they are. What do they do? What is their function? And in that context, let me just show you something else here. So here. So there's the inside track. It just pierced it by a brief moment last week, and then it spiraled and went right to the upside of the channel. So the inside track in my CD introducing the ChapmanWave methodology, I talk about the inside track. Let me see if I can just find it here. View, find, edit, find, inside track. So now we'll do this. And there's the inside track. Here's a chart of the Dow going back to the high of December of 2003. So what you do, you see the arch formations. There's no Chapman wave here, nothing. They're just arch formations and a down channel. But within the down channel, there's what I call a sell zone and a buy zone. So now you've got this particular stock. Oops, I got it in black. Going right into, from the buy zone into the sell zone. And now you're going to watch this real closely, because technically it's starting to show signs of improvement price-wise, but not in the basic technicals, although the MACD in the weekly chart is still very strong. And I tend to lean towards not shorting ever when the MACD is very strong, but looking for a potential bounce to the upside. So I wanted to show that you can look at charts however way you want. Let's look at SWI. I wonder if it's on here. Yep, there it is. SWI is, I've spoken about this before, SolarWinds Inc., software and programming, identity, network, performance, probabilities, etc. Now it goes to 60.95 in the monthly chart, peak E, pulls back, confirmed peak E, but the MACD is still holding well. Let's see how that corresponds to the inside track. Look at the inside track sell zone. It kept being reversed right up to the peak D. Remember how important peak D is? Peak D at the two doji tops on the 14th and that was the 7th and 14th, the weeks of the 7th and 14th of December. Huh? 9, 14, 12. Oh, September. I read it wrong. So, September of this year. And then what does it do? It comes all the way back and it goes right to, this is actually now a different technique, because this is an expanding wedge formation. But the principle that I've just shown you here of using this pattern that I call the inside track says, hey, you've got a lot of information here, because this thing's trying to bounce right off what would be the inside track support. So this is one of those that's had a spectacular couple of years. It's gone to a high in the monthly. It looks like the monthly is making some kind of a top, but that fast, I wanted to show how powerful that fast moving average in the MACD can be. It still hasn't confirmed a sell signal, other than to say, hey, you could pull back, but 47.83 is trading at 50.80. 47.83 is the 9-period exponential moving average, and it hasn't closed under there, although it broke it last month. So these are patterns that I like to teach, I like to show, I like to prove how successful they can be and help you in your trading. So now, with that said, I also wanted to show you something that I think is going to be quite important. If you look at the dollar, DXY, I've got it in a brand new buy mode in leg E. The start was a trough G at 78.60. That was made the 14th of September. It went to a very quick peak A, B, C, D, pulls back, that's what you expect, and it goes suddenly to this right arm extension leg E, and that goes to a high of 80.21 on the 11th of October, and then it pulls back. It pulls back under the 9-period moving average. But look at the MACD. That was still very strong. And what it's done now, it's gone to leg C. So I'm expecting at least a leg D before the dollar becomes more vulnerable to selling, or before it becomes vulnerable to selling. So, Basil Chapman, Dow's down 16, SP's down $1.91. I'll be right back. We'll look at Berkshire Hathaway.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter. to opening call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. So if there's a stock that covers a multitude of sectors, it is Berkshire Hathaway B shares, or B shares. I'm looking at the B shares right now. The way I'm calculating it right now, because the monthly chart technicals are still quite strong, I have an alternate wave count. This is very much like the down the S&P. In this case, it's got a little extra peak because it's an F/C. So I can't talk about the monthly chart just yet, other than to say it's gone back to a strong resistance zone, but that doesn't mean a thing as long as the technicals are strong. Now let's look at the weekly chart. And this was actually, I was looking at this before the storm. And I said to myself, the weekly has gone to a peak D, and the stochastics plunged to 59%, and the MACD is down with a strong, that is a wide beta between, a difference between the 9-period differential, that's the green line, and the red slow-moving average. That is a negative, and that says that technically I didn't do it, but I'll do it right now, because it's underneath, it closed underneath the 9 EMA for 2 sessions. I have to put a down arrow. Can it go higher? Yes, it can go higher. I might have to put a little, that inverted V shape for a peak E if it makes a peak E, or if it recycles higher. But in the meantime, those are the technicals that I use. But more importantly, when I go to the monthly chart, there's a doji peak F at 90.93. I hunted around for round numbers, and there was one, and it says that if at any point it's trading at 86.61, Berkshire Hathaway closed decisively above the round number 90, that would be a tip-off that there's a lot of strength still there, and it could go higher, retest the previous high, and in fact make new highs. But at this particular point, I must say, the weekly chart is the tie that I'm looking at, and that says, be careful. This is Mr. America, and this chart is saying, be careful because it could pull back, and the target it would go to is 83.55, would be the 200-period moving average, but 84 round number low back on the 30th of August. That would be the target over the coming weeks. If today's low, which was 85.42, it's trading at 86.61, is taken out on a closing basis. So now let's quickly do this. I'm going to give a review of what I'm looking at here. In the remaining few moments, couple of things. Dow Industrial Average. If the Dow closes if on Wednesday at about this time the Dow is under 13,000 to 12,970, be careful because it could go quite a bit lower. It could go down to the 12,700s quite quickly. If it's bouncing and it takes out 13,290. What was the high? Yep, 13,290. That says, okay, I'm not going to treat it as anything other than a counter trend rally for now, but it's very good action. But actually, I'm going to make it even easier for everyone. If you're listening to me, and if you know from my service, my daily service, what I look at all the time, if the volatility index, which is trading at 18.39, on Wednesday morning at this time, is above 19.80 in the 20s, this market will be pulling back very sharply. If instead it is between 1720 to 1610 or lower, that's going to be a positive and say, hey, you know what? We can go sideways, consolidate for a little while until the market really makes up its mind. The only way I can see this as being a really powerful move to the upside is the VIX goes into the 16s. If the VIX goes into the 16s and holds into Friday, and the Dow is up about 13,600, that would be a big positive. So in the meantime, all the stuff, the evidence that I'm looking at says TLT is trying to rally. It's trying to get, if the TLT goes into the 124s with the VIX in the 20s, this market's coming down. And if it holds somewhere around here and the VIX pulls back, we can just go through a sideways move. Thanks for being here. Stay tuned for Larry Pesavento, and I'll be back on tomorrow.
Are you looking for a precision edge?